Bitcoin's lagging, XRT is insanely shorted at 300%, and Tesla's stepping aside for Ford. What does it all mean? Plus, we've got GME earnings on deck and a breakdown of that Reese's politics stirring up Twitter. Let's get into it. Welcome back to Stonkcast, the market show for the average Joe. Whether you're a diamond-handed degenerate scouring the market for the next 500% play or a cautious investor looking for steady gains, we've got you covered. We break down the biggest market news, give our takes, and maybe, just maybe, help you make a dollar or two along the way. I am Brandon Shar along with Ethan Harris. Ethan, how you doing?
Hello. So good. Doing real good.
Smack dab middle of the week. It is Wednesday, March 12th, 2025. And boy, oh boy, do we have a jam-packed episode tonight. We had CPI drop this morning. Eddie Powell's got some moves to make in the coming weeks with his interest rate, and let's jump right into it. Before we get to CPI, though, we're going to start out with some juicy news on Tesla. Everybody loves some good Tesla news.
Juicy.
Tesla announced back in September, I believe, a potential deal with the city of Baltimore, where Baltimore would essentially purchase a bunch of Tesla vehicles for the city. Last summer, Tesla landed a $5 million contract with the city of Baltimore for a fleet of electric vehicles for the local government. However, Mayor Brandon Scott decided to pause that investment in September after the city decided to go in a different direction. So basically, the structure of this deal was very interesting because from what I'm seeing, at no point in time was the city of Baltimore obligated to buy Tesla vehicles. It was more like kind of like a verbal agreement, I guess is a loose way to put it. And basically, what'd you say?
Gentleman's agreement.
Yeah. It was a gentleman's agreement, and basically, at this point, city of Baltimore is backing out. They're telling Elon and Tesla, you know what, thanks but no thanks. And so it looks like Ford is potentially going to scoop in there and kind of clean up and take advantage of this potential contract. But the interesting thing, Ethan, is that they said it had nothing to do with Elon's political moves of late, his ties with Trump. So I guess there's really no telling what the exact reason is for it. But it's just another blow to a stock that just continues to take blows. As we've talked about numerous times on the show, Tesla continues to get beat up. It's currently trading at $248, extremely oversold and continuing to just get demolished along with the market from its highs of 488 back in basically mid-December. So yeah, that's what we got with Tesla. I mean, listen, Tesla's a massive company. They get tons of contracts. I'm sure Elon's not, if I had to guess, he's probably not sweating this one too much, but from an investor standpoint, it does make you a bit cautious, I guess, especially in an EV space that continues to be so competitive, right?
Yeah. So Ford will be trading. They'll be trading from $6 up to $9 now. So I don't know what they're actually trading. They're historically, for such a like quintessential American brand, their share price is so low. And I know
I'm
that
not sure if
share price doesn't always reflect the value the social value of a company, but still.
Well, I wonder how many shares they have out. Maybe they've just done so many different offerings that, they just have so many shares out there. Let's see. Uh, Total shares outstanding 3.9 billion. I mean, it's quite a bit of shares, but I mean, the market cap is what, 38 billion? So, I mean, yeah, I mean, I kind of agree with you. I mean, it could be trading a bit higher. We had this massive dump on it last summer. I honestly can't remember what the reasoning was for that. It looks
I think it
like
was around
earnings came out. Uh,
an earnings announcement. I'm not
Estimated
really
was
sure.
64 cents, actual 47. Yeah. So it looks like they did not beat their earnings last summer. And man, oh man, did that stock price tank. This massive gap on the chart. But yeah, anyways, to answer your question, right now it's trading just a hair below $10. It's at 9.59. So if they do, in fact, lock down, I guess, a deal with the city of Baltimore, it might be a little push up on the stock. Um, yeah, so that I thought that was interesting. It's just more bad news for Tesla in a market where there just continues to be bad news. Stock price keeps getting beat up, and it's just like one more little, you know, spill of gasoline on the fire.
Yeah.
Or a jab. Yeah, jab, spill the gasoline. We'll take all of it. I mean, it's
I mean, you're talking about electric vehicle companies, so it's kind of insensitive that you're calling it, gasoline on the fire, but whatever.
that's true. That is kind of insensitive. Maybe we should stick with the jab. Yeah. Um, so that's the latest on Tesla. And now let's move on to the hot news for today, which was CPI, Consumer Price Index, a very important gauge for Daddy Powell, for the Fed, on which direction inflation is going, right? So the Consumer Price Index came out this morning. For both all items and core, increased 0.2% in February, slightly below expectations. On an annual basis, headline inflation was at 2.8%, while core was at 3.1%. Both also were zero point 0.1 percentage points below 1 basis point, below the Wall Street consensus and the previous month's levels, which is good. According to CNBC, prices for goods and services moved up less than expected in February, providing some relief as consumers and businesses worry about the looming impact tariffs might have on inflation. The Bureau of Labor Statistics reported Wednesday the Consumer Price Index, a wide ranging measure of costs across the U.S. economy, ticked up a seasonally adjusted 0.2% for the month, putting the annual inflation rate at 2.8%. According to the Labor Department agency, the all item CPI had increased 0.5% in January. CPI came in this morning, and it was a nice relief for the market to some degree. As you can see here, we're taking a look. If you're on YouTube, this is the U.S. Consumer Price Index year over year percentage change. I mean, my goodness, I forgot about this, but we were up to 9% at one point, mid 2022. And, right now we're sitting down here. Less food and energy, we're sitting at 2.8%. With food and energy, 3.1%. But the point, Ethan, is that we are still well above the Fed's mark, right? Where they want us to be at. They want us to be at 2%. That's their utopia inflation mark. And we are still above it. So, how did that impact the markets today? Basically, we got a nice push when CPI came out at 8:30 a.m. Eastern time in the futures markets. I think at one point in time, the S&P 500 was up 0.8%, and I think the Nasdaq was up 1.15% at one point, if I remember correctly. And basically on the day, you got the S&P, the SPY ETF, closed at 0.53%. You got Qs closing above 1%. But if you take a look at some of the various sectors, Not all of them were green, Ethan. So, we did get a close above, but it was kind of a mixed bag, especially as we headed towards the end of the day. And the real interesting thing to me, if we look at the chart here, this is the daily chart for SPY. And as I've drawn out here, as you can tell, we're starting to form what you would call in technical analysis a bear flag, a bear wedge, a pennant. There's a lot of different names for it. But basically, if this plays out the way it could, price is going to bounce off of these levels, and then we would eventually break down for another leg. So, this is a quick reference guide provided by TrendSpider. Bullish flag, bullish wedge flag, bullish pennant. These are just a couple basic patterns that you can see in trading. And right now, at least what I'm seeing, it kind of looks kind of like a pennant. But the point is very simply that it looks like it's going to take another leg down. So that's kind of where we're at in the market right now. It was a nice reprieve to get the CPI print. We got some more data coming out later this week that's going to be telling. And, as far as how that's going to impact rate cuts, Ethan, we have, the rate decision coming next week. I don't really expect anything substantial there. I don't think we're going to get a rate cut. I don't think we're going to get a rate hike. I think we're going to stay just about the same. But any thoughts on inflation?
Nothing on inflation specifically, but I did want to quickly explain candles and wicks because we've hinted at it, we've talked about it. People in chat have said, "What is that? What are we talking about?" And if you bring up that chart where you showed the pennant again, the candle and the wick, the candle represents the large rectangular portion of that trading time period. So any and go to, I think it's Thinkorswim, the actual Thinkorswim. Yeah, and then give me some zoomage. So this is this a 1 minute chart? Five
No, this
a
is
day,
daily.
daily. Okay. So if you're looking at this chart and you don't know, what is a candle, what's a wick? I just know red color, green color, red bad, green good, right? Um, the candle, the body of it, represents the difference between the open and the close prices. So for that day, if we look at what you're basing your flag or your pennant off of, it's a red candle with wicks above and below. And so uh, a wick, the body, the rectangular part, shows that it's opening at, what's the price for that it opened at,
562.
and then it closed at what price? It would be lower than 562 since it's red.
Like 558 close.
Okay. And so we'll look at the line extending to the top. That's the highest uh, trade that was on the market during that day, and then the same thing for the lowest, the wick at the bottom. They just suggest that within that day, the price experienced some fluctuations that were both above and below the open and close prices. And so if you look at it on a 1 minute chart, 3 minute, 5 minute, whatever, it doesn't really matter. It's going to represent the same thing. So it's going to represent within that time frame. The top of the rectangle is the open price, and the bottom of the rectangle is the close price. And the wicks, the thin lines, represent the highest most or lowest most price. Now, if of course, if you were trading something at it opens at minute one for $1 and it reaches $2, then you're just gonna and then there's only trades within $1 and $2, you're just going to see one solid rectangle, right? But if at some time frame it traded $2.10, then you would see a wick up to $2.10 outside of the rectangle.
Yeah, very well put, Ethan. Um, and I'm sure at some point here soon we can do a deep dive just on chart patterns. I think that's here's the thing, right? I think a lot of people get into trading and they just overload themselves with indicators. They overload themselves with various techniques and whatnot. It's very easy to do. There's so much to learn when it comes to the stock market when you're trading, investing. But at the end of the day, the most important things are price and volume. Those are real real time action going on, right? Um, Moving averages are lagging. Other indicators, momentum oscillators, things like that, they're all lagging. So understanding the basics is fundamental, gives you a good foundation to build on. And a lot of times, I I still like just looking at price action. Um, sometimes I'll throw on some indicators to get some confirmation, confluence. But at the end of the day, I think making sure that you understand, you have a good grasp on price action, being able to spot certain patterns, and understanding that patterns repeat themselves in the market can really take you a long way into having a solid foundation.
Yeah. And I think, and this is just another rabbit that I'm chasing, but uh, it's also important to recognize that the prices that the chart represents, those are representing a person at the end of the day that's either purchasing or selling that security. Now, of course, you've got algorithms that are trading a lot of these nowadays and whatnot, but at the end of the day, there was a person or there is a person that's relying on it. So when we think about the wick and the candle, we're thinking, okay, so there's tons of people that are uh, bombing in at this wick here, but we'll get into wicks and candles later. I'm starting to just go off
Yeah,
the rail.
and real quick, Ethan, just wanted to touch on this before we move on. I saw this the other day. Basically, the Fed watch, right, as far as rate cuts go, and the probabilities of rate cuts for the months upcoming. So for the month of March, right now, we're sitting at a 5% probability that the Fed cuts rates. Super, super, super low. For May, there's a 42% chance. For June, an 89% chance. In July, a 93% chance that the Fed cuts rates. So it's looking like we're gearing up for a summer rate cut at this rate. So will we get two? Will we get three this year? I guess that kind of remains to be seen. I'm kind of leaning more towards only two. But again, inflation is going to go a long way in determining that and what Powell and the rest of the Fed decides.
Yeah, cool. Well, we'll move
All right,
to
next up.
Bitcoin, and as far as tonight, my internet's real spotty, so I keep talking over you. So I apologize. I found the person that I was referencing the last episode. The last episode, the YouTube channel is Crypto Currently. So all of this knowledge is attributed to them. It's not something that I independently came up with. The market sentiment right now for Bitcoin is extreme fear. So if we look at the CMC Crypto Fear and Greed Index, it is at its lowest level ever. And it is an extreme fear territory. Historically, extreme fear doesn't last long. And just like extreme greed, that ended, and fear will as well. So if we look at the weekly close and technical levels, Bitcoin closed below 91K, confirming a breakdown risk. So, and then the 50-week moving average is close by to that. And historically, there's been strong support in bull markets. So there's a potential test of 78K to fill the CME gap before a bounce. So that's going to be a critical test coming up. And then global liquidity is rising. And historically, that's a leading indicator for Bitcoin by 75 days. So there's usually like a 75-day gap where, as global liquidity rises, 75 days later, Bitcoin also tracks and trends along with that. So it's something to watch. Is that as we see global liquidity start to make moves, we can watch Bitcoin do the same thing. And then looking at the DXY, or the US dollar index, they had the biggest weekly drop since 22, a move that previously marked Bitcoin's bear market bottom. So we could be at the bottom of Bitcoin's bear jump before it bumps up. So big picture, are we at a pivotal inflection point? Bitcoin is sitting at a crucial risk reward level. If the cycle isn't over, there should be the bottom. Weekly closes below the 50-week MA would invalidate the bull thesis. So late March, we could see a turning point for Bitcoin and traditional markets. So what should we do? If you mind the ancient quote, what is it? Buy the fear. Then this would be the time to start buying some Bitcoin and getting a little bit of cash into the market. I don't think we're at the bottom. I think there's probably going to be some testing still, but just do a little bit of dollar cost averaging into Bitcoin, and while everybody else is feared and afraid, put a little money in, and we'll see. Hopefully, Bitcoin win out against this potential bear test right now. So that's Bitcoin. And I thought that was just a very insightful, it's very insightful seeing that there's like the 75-day trend with global liquidity, which it makes sense because as money sits in the system globally, there's people are going to want to park it. Institutions are going to want to park it somewhere. And so
Right.
ultimately it would find its way into Bitcoin.
Yeah, and speaking of Bitcoin, that was something else I was paying attention to this morning, Ethan. When CPI came out, you had the indexes that, rose accordingly off of the softer CPI report, but Bitcoin was lagging. It was up, 30 basis points, and you had the Qs that was up well over 1%. So I thought that was very interesting because typically they run in tandem and it wasn't as strong. And when things started to kind of sell off mid morning, the first thing to go was Bitcoin. Bitcoin was down like, 2% or something like that. And then SPY started to roll over, NASDAQ started to roll over. So thought that was interesting too.
Yeah. Let's see here. Should we bump into some stocks under pressure?
Yes.
We've got XRT. Which XRT is the symbol for the S&P 500. S&P 500, it is shorted 300%. So the question is there a squeeze coming on the S&P 500? What's going on? Why is this happening? Extreme shorting sets up a potential for a short squeeze if enough buying pressure forces shorts to cover. Now, the reason why shorts or XRT is shorted is because it allows us, well, the theory is that it allows them to short GameStop inadvertently using basket swaps. And so if we look at some key factors, look at borrow rate. If it spikes, shorts are under pressure. look at some call option activity. Increased call volume can trigger gamma squeezes, and then liquidity and volume. If volume spikes while price holds strong, a squeeze is much more likely. And there could be a sympathy play on GameStop that if XRT jumps, then so could GameStop, since there are. I don't know where I was going with that, but it could be another setup. But it also could just be the market being over leveraged. So
Yeah,
very interesting.
XRT is getting
Um,
crushed.
yeah,
Yeah, XRT is getting completely demolished, and same with IWM, same with small caps. Small caps, retail. There's some overlap there. 300% though, that's a ton. That is a ton of shorts.
and I'd be interested to see the open interest on it as well. But um, and then similarly, we've got GameStop earnings coming around the corner. So what should we expect? What's going on with GameStop? GameStop's always an exciting earnings play, mainly because it's a volatility event. They could go up, they could go down. Most of the time, they tend to go down.
I was gonna say, you
But
told me most of the time it goes down, right?
yeah, yeah. Options IV is usually high going into earnings, so it could come into some big swings. Things that we're watching for is revenue and profitability. Are we going to see any real improvements? We're probably not going to see any real improvements from the sell off of the Canadian EB Games and GameStop franchises. I if that went through. I don't recall if that went through yet or not. Um, but you probably wouldn't see any reporting on that for another like quarter or two, I guess. Um, but maybe they'll say something during earnings. We'll learn about cash reserves with no debt. GameStop's financial position matters for future growth plans. We looked into this a few weeks ago. Apparently, that's something that GameStop aficionados like tout, is that they've got like 5 billion in cash on hand. But apparently, that's not that big of a deal. They're in like the top 50. They make like the top 50 of that list, but it's not like top 10 or something like that. And then look for any surprises, any things like buybacks, partnerships, and whatnot to shake up price action. So the thing that retail would be looking for is Ryan Cohen doing something crazy, like saying, "Hey, we're going to do
Bitcoin.
a big yeah, we're going into Bitcoin. We're doing something crazy." So there's tons of rumors. Do you buy the rumor? I don't know. It's GameStop. Go for it.
One thing to note also, Ethan, I was taking a look at the options chain for GameStop right now. The current IV percentile for GameStop, get ready for this one. Percent. What that means, ladies and gentlemen, is that in the past 52 weeks, the current, in the past 52 weeks, the implied volatility on GameStop has been higher than it currently is 91% of the time. So
Wow.
this thing is 9% on the percentile, current IV
Yeah.
percentile, 9%. That is super, super, super low. That is like the better than the sweet spot if you're buying premium. If you're buying puts or calls or whatever, this is what you want. You don't want something like Tesla that currently has an IV percentile of 100%, meaning over the past year, the implied volatility has been lower 100% of the time. Because if you get a day where, Tesla, for whatever reason, doesn't move a whole lot, your premium is going to get like cut in half because it's already inflated so much. So essentially, what I'm saying is that GameStop, if you're a buyer of premium, long or short, whatever way you're going, um, this is the time to get in, theoretically, just because of where that implied volatility is. And then when you do get a move, you get to enjoy the ballooning of that implied volatility instead of it crushing you. So
Right. And is that because, like, does IV essentially, is it just very sensitive to price swings?
yes, yeah, it's I guess the best way to put it is it's correlated to that, right? So it's you have historical volatility, and then you have implied volatility, right? So basically, over the past 52 weeks, the historical volatility high, so the highest it's been is basically $4.19. That's not a ton. The lowest the historical volatility has been is 28 cents, right? So the current historical volatility percentile is also super low. It's even lower. It's at 4%. So typically implied volatility is going to be a bit higher than historical volatility. So it's just what the options market, the market makers who are, pumping out these calls and puts, it's what they're implying um, the move is going to most likely be as far as a range, right? And so, it's basically so low right now, Ethan, because we haven't really had any major moves up or down on GameStop really since, June of last year, basically over the summer, right? We went from 16 to 64, and then we went from 18 up to 48. And ever since then, things have just kind of been tightening as far as the volatility goes. So that's really what it is. You're getting a contraction in the volatility in GameStop. And as somebody who shops around for, options, that's what you want. You want low implied volatility. That's where you want to buy in. So
We'll hop on and look at the last point, which is Reese Politics. I ran across his Twitter account earlier this week, and he was noting that the number one, this is where I got some of my XRT information, the number one reason to be excited for GameStop, besides the obvious, such as earnings, Ryan Cohen pushing the button with 4.6 billion in cash and Roaring Kitty waiting to return, is that they've ruined XRT to levels only seen a handful of times before. Shares outstanding of XRT, and if you're listening, XRT is the S&P 500. That's the ticker symbol.
it's
XRT,
the ticker for the retail part of, yeah, of the S&P.
okay. Shares outstanding of XRT, which is used to suppress GameStop, got to its lowest point since April 8th of 22 and February 7th of 22. When this happened, GameStop moved from $25 to $47 per share 33 trading days later. And then again in May, where GameStop recovered all its losses and then went on to gain another 35%. So eerily similar situation to now. So what could that mean? Could we be looking out 33 days from today to see, what GameStop does? Maybe. I mean, 33 days, uh, in 75 days, we'll see Bitcoin jump. In 33 days, we'll see GameStop jump. So I don't know. Maybe load up in a little bit of Bitcoin and some GameStop, see what happens.
Yeah, and just to give a bit more context, right? So you have different tickers that represent sectors, right, for the S&P. So you have the main 11 sectors: industrials, energy, technology, healthcare, things like that. You have XLK, for example. That's a select sector in the S&P 500. XLK is technology. But then you also have these other index funds, that these ETFs that represent like many components of uh, the S&P at large, right? And so one of those, as Ethan was saying, is XRT. It's one of the Spider Series Trust is what it's called. And the fund XRT invest in stocks of companies operating across consumer discretionary distribution and retail, broadline retail, specialty retail, apparel retail, automotive retail. It's a lot of retail, right? So that's the makeup of XRT itself, and there's a basket of various companies that it holds. The top ticker in the holding is actually ACI, which actually I've never even heard of. Do you know what ACI is?
No, no clue.
Albertsons Co. Never heard of it. So it's in the consumer staples. Albertsons Companies Inc. I guess is ACI. Never heard of it, but anyways, that is XRT. It's retail. So it's as I was showing earlier. It's getting beat up right now, pretty bad, which makes sense given the fact that you said it's got 300% short interest. So
Yeah, and I think besides that, a couple of other things that he noted today was I'm not sure if you found this on like a Bloomberg terminal. That's what it looks like from the screenshot. But he made a post where almost all sell orders this afternoon hit the lit market, but none of the buys were on the lit market. They were all dark pool. So it's interesting. That's
dark
price
pools.
manipulation.
That's a rabbit hole we got to go down at some point for the listeners, Ethan. Dark pools.
Yeah.
All right. What we got next?
I think that's everything for both of us.
Perfect. Yeah, I guess that's it, right? Yeah, as far as the rest of the week, right? So again, CPI came out. We're smack dab in the middle of the week. We still have some more data coming out later on this week to wrap it up. But things still look bearish. I wish I could get on here and say things look bullish. I think everyone's 401k would greatly appreciate that. Not that what I say impacts the market in the slightest bit, but it would be nice to have a rosier picture. But I don't think we've seen the bottom yet. Ethan and I talked last episode about that kind of that capitulation, that puke that generally happens in a bear market before it turns around. And I don't think we've seen it yet, Ethan. I think we still have some more downside. So you definitely got to be on top of risk management. You definitely have to know your entries, your exits. You got to have a plan, and you got to be ready to get out if it goes against you. Because the moves right now, the VIX is still above 20. Things are violent still. You're going to get big swings, big jump ups, big sell offs. So stay on your toes, I guess is what I'm trying to say. As always, please like and subscribe. We've been seeing some nice growth on the YouTube channel. Much appreciated. Drop a comment. Let us know what you want to see. If you're on iTunes, Spotify, Amazon, we are on there as well, wherever you listen to podcasts. Ethan and I will be back with a special episode on Sunday. We have some guests coming on. It's going to be great. We're going to talk market. We're going to talk a little bit about what the journey looks like for younger traders in this next generation coming into the market, some things to pay attention to. It's going to be fun. But other than that, I think we will sign off here. Have a good night. And remember, as always, plan the trade and trade the plan. Good night.